NIO stock surged in premarket trading after the Chinese electric vehicle manufacturer reported better-than-expected financial results for the first quarter of 2026. The company exceeded Wall Street forecasts on both revenue and profitability, which pushed shares up more than 5% before the market opened. The stock reached $5.77 during the session, a 3.2% increase from the prior close. The standout figure was NIO's first quarter revenue, which came in at $3.8 billion, slightly above the $3.7 billion forecast. This represents a 112.2% year-over-year growth, driven by strong demand, and a significant increase in vehicle deliveries. The company delivered 83,465 units in Q1, a 98% jump from the same period last year. This delivery performance was a major factor in the positive market reaction. Profitability also improved dramatically. NIO reported an adjusted loss of just 3 cents per share, far better than the 9-cent loss analysts had expected. In the same quarter of 2025, the company had reported a 42-cent per share loss on just $1.7 billion in revenue. This turnaround signals that NIO is managing. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. It's costs better and gaining traction in a competitive market. The gross profit margin for the quarter jumped to 19%, up from 7.6% in the prior year period. This improvement is a sign that NIO is not only selling more vehicles, but also doing so at a more favorable margin. This is particularly important in the electric vehicle industry, where production costs can be high and profit margins are often tight. Looking ahead, NIO provided second quarter delivery guidance of 110,000 to 115,000 units. This range is above market expectations and suggests continued strong demand. The company also guided for Q2 revenue between RMB 32.78 billion and RMB 34.44 billion, which is higher than the RMB 31.83 billion Wall Street had projected. This guidance reinforces investor confidence in NIO's ability to maintain its momentum. The stock's performance reflects the market's positive reaction to these results. Since the start of the year, NIO shares have gained 10%, and over the past 12 months, they've risen by 42%. This growth has been driven by a combination of strong financials and a broader shift in investor sentiment toward electric vehicle manufacturers in China. However, the market is still cautious about the long-term sustainability of this growth. While NIO's Q1 results are impressive, investors will be watching closely for signs that the company can maintain these levels of performance into the future. The electric vehicle market is highly competitive, and NIO faces strong rivals from both domestic and international automakers. The next key signal to watch will be NIO's second quarter results, expected in the coming months. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. We'll provide a clearer picture of whether the company can sustain its current trajectory. Additionally, investor sentiment could be affected by broader macroeconomic factors, such as changes in interest rates or shifts in consumer demand for electric vehicles. For now, the market appears to be reacting positively to NIO's performance. The combination of strong revenue growth, improved profitability, and better-than-expected delivery numbers has boosted investor confidence. Whether this momentum continues will depend on how well NIO can maintain its operations and adapt to the evolving market conditions.